to your three buckets of inflation.
So the first bucket we're talking about, which was the Federal Reserve Board's kind of transitory, transient kind of thing. I believe investors, when they hear adjectives, they put numbers to it. So if a corporate management team were to say in a conference call, our business is up slightly, right? You kind of say it's up 1-2%. When they say modestly up 3-4, if they say moderately mid-single digits, if they significantly, you're probably hitting double digits, right? They don't say that, but we attribute numbers to those words. So when you hear the words transitory, I think for most investors, the thing is several months.
Yeah.
And it goes away. And part of that is the pandemic-related base effects start to moderate, right? So your year-over-year jumps in inflation will start to slip.
Theoretically, that starts in June.
Right.
With the June data, I should say.
So I'm saying that, which means you get it in July, right? So it's several months and then it dissipates. The problem is that some of the issues that we're talking about in terms of, you mentioned chips before. So those chip shortages, the idea of labor costs. So if you look at the National Federation of Independent Business, their biggest problem is quality of labor. They don't have the right fits for the people. It's not, this whole discussion around, is it the enhanced unemployment check keeping people out of work? I'm sure there's some people doing that, but not generally. There's some people who are fearful of COVID and going back and getting sick. There's an answer to that called get vaccinated, but whatever.
Right.
And there's a third one, which is women who can't get their kids back to school. And that's a huge number. And, in that sense, they want schools open so they can get back to work. It's not they don't want to come back to work, but again, that might have been a cashier at a store that's no longer reopening. And they don't have the skill set to operate a machine shop, work in a lathe in a machine shop in Waterloo, Iowa, or work in coding in Silicon Valley, or drive a truck, with a big rig. They cannot work on a construction site. You really want people who are untrained to be, on an infrastructure site with a jackhammer? Probably take their foot off. So, we have skills mismatches too.
And we've had a skills mismatch for a long time, but I feel like the pandemic
like it's getting exacerbated.
Yeah. And now we have countless brick and mortar employees with retail sales experience, and that's about it.
Look, it's not, if someone with retail sales experience can go to work in a hotel pretty easily and stand behind a desk and say, can I check you in,
right,
Mr. and Mrs. O? I mean, you don't need to be a skilled, again, operator of a machine tool to do, that's a different kind of skill set. It's like, welding is a really high-end skill set. Welders make a lot of money.
I know they do.
And you wouldn't want to give me one of those torches. I'd burn a body part off.
My old boss, Richard Fisher, that was his favorite example. Welders.
It's really underwater welders, the guys who fix pipelines off the Gulf Coast. They make these are Navy frogmen, former Navy frogmen who learn how to weld, and they get paid 6 figures.
Wow.
Usually starting with a 3 or a 4, because it's really dangerous to go after a hurricane under there and try to reconnect those gas lines.
I know where I'm going to send my kids.
I mean, I shouldn't, I'm not going to say, because I often say things I shouldn't say, but I used to tell my son who's got a doctorate in psychology that he should have become a plumber. And my wife says, why'd you don't do that? And I said, because I think he'll make more money cleaning the crap out of people's toilets than out of their brains. But I say that as a joke, but I'm not actually joking.
No, if you think about the average age of an electrician in this country, when I was in high school, there were the guys in shop. There was shop.
Right.
Try and find shop in a high school today.
No, they're probably doing programming somewhere, coding, which is fine. There's nothing wrong with that. But we don't have mechanics. We don't have electricians. We don't have plumbers. And you try getting a contractor to show up when they say they're going to show up at your home. So these are really good jobs, get paid really well, but we have a lot of people who don't have those skills. So the skill set issue is a real problem, and we're going to spend money on training. We're going to have to get people there, but that doesn't get resolved overnight.
No,
that takes a generation. I'm saying we can't remedy some of the issues. So I was talking about the NFIB data. Historically, when the NFIB is telling us, small business people are telling us that quality of labor is a big problem, within 6 to 12 months, you have significant wage increases. So I'm hearing it now. I was talking to somebody recently, the family office, that they own a bunch of hotels, and they need to fill 200 jobs. and offering $1,000 signing bonuses, and only 3 people signed.
Yeah.
Right. There are people trying to find home builders are trying to find people to work on their sites to put up new homes because we have a severe shortage of them.
Yep.
We don't have the people; they're not available. So I think these are issues that aren't transitory. They could stick around for 9 to 12 months. If you need copper, it'll take 3 years to put up a new copper mine.
Mm-hmm.
So these supply issues don't get resolved as quickly, and that's why I call them sticky. Now, you might sit there in 9 months and say, we're going to replace copper with plastic or aluminum or something like that in that specific application.
Yeah.
You might say, I'm going to bring on some robots if I don't have enough people. But again, this is not something business can do literally overnight.
Yeah, I read a headline that a major manufacturer was closing a plant and moving it to Mexico. That was the first time I'd seen one of those headlines in a long time.
Having been an industrials analyst years ago, the quality of labor and product out of Mexico has not been as good as the quality. They would always have to bring it back and redo it.
Mm-hmm.
And so we'll see. Look, there are a number of great maquiladoras that probably do fantastic work. But I just remember that my experience is kicking up and saying, "Ooh, that didn't work out so well last time."
So wage inflation, that's a big boogeyman
it's 60% of corporate cost.
Yeah,
that's what we have to remember. If your transportation costs went up to deliver something and maybe it was cost you 3% more, it's one thing. But if it's 60% of your cost going up, you need to do something about it. So either we're going to get some pressure to raise prices,
mm-hmm.
and the other one would be if you're not able to do so, then you're getting corporate profit margin pressure.
Well, there's the issue of pricing power, right?
Yep. So some companies have them, some companies don't. And the ones that don't are going to have to be really, really creative or their margins will suffer. So it's kind of a tug of war. Are you going to get some inflation or are you going to get some
margin compression?
Margin compression, right. It's one of the two. It's not kind of this easy, narrow path in between. And I'm very happy to not work for the Fed because I think navigating this path is going to be very difficult. Everybody loves you when you're adding boost to the punch bowl. They don't like you when you take away the punch bowl.
No, I mean, just the very idea. I mean, one CPI print and, we all lost our minds.
And people were worried about the CPI print. They knew that it was going to be bad and it still shook them. What if it's shaking them in August and September?
And that's a whole different issue.
I think the bond market may test the Fed kind of like they did in February and March. If there's again, I'm not talking about regime change, but I am talking about a little bit more persistent, stickier inflation than transient.
So what can the Fed do? I mean, housing is an issue right now.
Look, the Fed's a bit boxed in, I think is the best way. And people have said that. They put themselves in a kind of an uncomfortable situation. Mm-hmm. And now they have to kind of, I don't know if it's hope and pray because it's too strong a term, but they better be right or they're going to get egg on their face. And egg on the central bank's face, the most important central bank in the world, isn't the best thing for us.
No. And it's interesting to me that that the whole financial stability issue has come to the forefront in Fed speak so quickly. And now the ECB is kind of echoing the same.
Which is actually, I'll give them credit for that, for even bringing it up. Lil Brenner brought it up in the report, but
it's usually too late, though.
I understand that, but they tried to avoid all of that in 99, 2000. They just didn't talk about it. You had the original irrational exuberance statement in 96.
That was the Greenspan era.
Right, that was 96, right? It was way ahead of its time.
Yep.
And then that was it.
And then margin debt took off.
No, I'm saying, but then when you got to 99.com frenzy,
mm-hmm.
nary a word from the Fed on this. So I give them a little bit of credit that at least they want to be on the right side of it in case mm-hmm. something bad happens. We talked about it. If you paid attention or not is your issue, but we at least mentioned it.
Mm-hmm.
They're not going to mention a lot, but they'll at least get some credit for that. But it's also interesting to see, Chair Yellen, Treasury Secretary Yellen almost make a chair statement.
Oh, that was...
And then pull it back a bit. And then you saw the Fed said, in the minutes, the commentary around if things get stronger, then we would have to react in the interest rate environment. And it's like, big duh. Like, of course, that's part of your mandate. So, but it was interesting that they're willing to even have that show up in print.
Yeah.
Like they're aware that this is a potential problem, even if they don't think it's going to be a problem.
Well, and they're starting to talk about housing a little bit more. So you can almost imagine that, people don't realize that it's $40 billion a month of mortgage-backed securities, but prepayments have been insane. Mm-hmm. So you might have months when the Fed is buying 3 times that amount in the mortgage-backed securities market just to reinvest, just to keep the stock of mortgages where they are. And it's just a huge influence right now. And yet,
but they always do that. I mean, I'm less, people talk about the Fed's manipulating the markets, right? I've heard that comment, and that's their job. They're allowed, if things get stuck in the markets, the Fed comes in with a crowbar and kind of gets it unstuck. That's part of their job. Again, if you and I do it, we go to jail. But I don't really have a problem with that. I think that is their charge. I think the debate is, have they gone too far?